Hello guys, what's up and welcome to my YouTube channel. This is Mil Gleam. If this is the first time you're coming across this channel, kindly subscribe, like and share our videos. So today we're going to be talking about a very interesting topic in accounting. We're going to be talking about the double entry principle. So look at the double entry principle, and we'll also look at 6 major types of transactions in accounting. So thank you, and I hope you stay to the end of this video because you're going to learn a lot from it. I promise you, you're going to learn a lot. So just stay tuned to the end of this video. So the double entry principle was introduced by Luca Pacioli. He was an Italian mathematician. He introduced the double entry principle, which states that for every debit entry, there must be a corresponding credit entry. So this is one very interesting thing that is always said in every accounting lecture, and every accounting student is always familiar with this double entry principle, and it helps you in posting transactions into the ledger. So when a transaction occurs, you as an accountant or a bookkeeper, you need to know the type of transaction that has occurred before you can post into your books, before you can keep records, before you can record in your ledgers. So we're looking at 6 types of transactions in this video. So the first transaction type we're going to be looking at is expenses. So expenses are day-to-day operational costs that we incur in our business. So it can be rental costs, it can be fueling, it can be transportation costs. Expenses are those day-to-day costs that we use to run the business. It can even be our payment of salaries. So those are expenses. And the accounting rule for posting an expense is that every expense should be debited. It is debit all expenses. So all expenses are on the debit side. So if you want to increase the expense figure, what you're going to do, we don't do plus subtraction and addition in accounting. What we'll do is debit and credit. So you know that an expense is on the credit side. So if you want to increase the figure of the expense, what you have to do is to post the new expense to the debit side. That helps to increase the value of the expense. So if you've discovered that there's a reduction in your expense, what you have to do is to post on the other side, that is to post on the credit side. That will help to reduce the value of the expense. So assets is another transaction type. An asset is what is owned by a company. Things like land and buildings, the furniture and fittings. Then we have things like money in the bank, then physical cash. These all represent assets of the company. Those cash and the money at the bank, those are financial assets. And an asset is posted on the debit side. And to increase the asset, you have to debit. To reduce an asset, you have to credit. So that is how, that's what it is about the asset. So the other type of transaction we have is drawings. So drawings are the money that is withdrawn by the owner of the business. It is money taken from the business by the owner for his personal use. Please note that drawings are not treated as expenses because those drawings are not monies that was incurred by the business. So the drawings is also a debit transaction. It is posted to the debit side of the account, and also the same principle. To increase the drawings, you have to debit. So, but to reduce the drawings, you have to credit. So another transaction type is income. Income are inflows into the business. They are money that are being paid by customer. They are what a company earns from its business dealings. So these are incomes, and all incomes are credited. They are posted to the credit side of the account. So to increase an income, you have to credit, but to reduce the income, you have to debit. So that is the principle. So another type of transaction we have is liabilities. So liabilities are things that are owed by the company. It is what the company owes to other people, like the suppliers. So we have that is called trade payables. So this is an example of a liability. So liabilities are all the things that a company owes. And also, I think the last transaction type is capital. So capital is the money that was invested into the business by the owner of the business. It was used to start up the company. So that is the capital. It was money initially invested by the owners or the directors of a company, and all capitals are treated as credit entries. They are posted to the credit side of the accounting principle is debit all expenses, assets, and drawings. Then for the credit side, you credit all income, liabilities, and capital. Once you have the simple rule and you understand a transaction type, it's going to be very easy to post entries into your book. You won't have any issues when posting transactions. So when a transaction has occurred, the first thing an accountant does, or a bookkeeper, is to understand what kind of transaction has occurred before you go ahead posting. You always know these accounting principles. This will help you when making postings. So if you really enjoyed this video, just drop your comments on the comment section, and also like and share our video, and don't also forget to hit on the subscribe bell so that you get notified anytime we post a video. Thank you so much for staying tuned to the end of this video. So till next time, we'll see, and we're going to discuss a very interesting topic in accounting. So it's bye.